You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a little program we like to call the option block. My name is Mark Longo from theoptionsinsider.com. Yes, I'm coming to you back live from the Options Insider Studios. I've been traveling a bit of late, but now I'm back, so don't worry, you're not in the clutches of a sick Uncle Mike and a umbrage-filled Rock Lobster. No. I am back holding down the big cheer from the Options Insider Studios and yet another scenic and somewhat sunny Chicago. And, of course, we welcome you to the program. And if you are new, first off, welcome. Secondly, best place to catch up on all things Options Insider Radio, as well as all the other content we do. So that's breaking news, analysis, education, unusual activity, all that fun stuff. The mothership, theoptionsinsider.com. That is the fountain from whence all of our information flows. All the shows there on the right-hand side. Click on them, and your journey has begun. Of course, you can always find, if you just want to mainline the shows, your iTunes, your TuneIns, your Stitchers, your Google Podcasts, your Pocket Casts, and so on and so forth. So we're all available there. Of course, you can always grab us via our mobile app as well. It's all baked in there. You can make your own playlist. The app's actually kind of cool if you haven't played around with it. It also has all of our social outlets baked in there for you as well. Including, actually not including, I don't have that in there yet, but if you want to, if you can make it, if you're around every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, MIXLR. We'd love to see you in there as well. Ask some questions, some comments, some pearls of wisdom, some insights, some nuggets of wisdom, and some hilarity, all sorts of good stuff. You guys can share it with us there. And, of course, it's also the easiest way for you guys to get access to the show in that crucial window between the live stream and when it goes live the following morning. So if you can't make it live, you want to grab it really quick, that Mixlr page has all the archives, at least for the last week or two there as well. All right, and joining me on the old program, I am joined by the aforementioned. Let's see if he's feeling better. Let's start off in the land of St. Charles. We were joined by the pickle provocateur himself, Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, sir. How are you feeling today?
Oh, I am feeling great. The thought of the Option Block Monday episode is what kept me inspired and helped me to make it through these last hard days.
Nothing better than doing a show when you're under the weather. Kind of like Jordan playing with the flu. You know, you gotta fight through, but it's not exactly fun. I feel your pain, sir. I've been there many times. So it's people don't understand sometimes the lengths we go to bring you this content on a regular basis, all for free, I might add. So you can't argue with the price. All right, and also joining me on the old program today, beaming in from a little bit farther away and hopefully not under the weather himself, he is the Rock Lobster, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program. How are you feeling today, sir?
I am well. You know what? How is your arm sore from hoisting all the frozen cocktails at all the many trade shows?
It was more Cuban cigars, but yeah, there was some of both. Yes.
So you're the tennis elbow is. Are you? I just want to make sure you could hold down the hosting. I was a little worried. I was a little worried for you.
I'm still hungover from my various excursions to far-flung locales, both coasts, in the span of a couple of days. That's what happens. March, for some reason, is just is high season for conferences in the derivatives world. Never really figured out why that is, but c'est la vie. They call and I must answer. And so, yes, hither and yon, quite a bit. Maybe we'll get to some of that in a little bit. But first, let's get right into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the man said, this is the portion of the show where we break down what was catching our eye in today's market activity. A bit of a quiet one today on the old street. Most of the major indices finishing the day sometimes literally unched or very close to it. Not a heck of a lot going on. Net movement, we were selling off a little bit earlier in the day. That seems to have been abated by the end of the day, like I said, with most of the major indices. Closing effectively unched on the day, and VIX cash still hovering around a little bit north of that 11 handle, about 11:30 to close the day here. So it wasn't a heck of a lot popping off. A few topics come into mind. We'll get to those in a minute. But first, I want to get what, if anything, was catching your collective eyes. Let's start in the land of the pit. Mr. Rock Lobster, what was lighting it up over there in the land of the pit on this relatively quiet day on the street?
We were looking at Apple, of all things. That was really the big, I've said this probably always, just because the volatility's so low. So that was something that we did look at. I think there was a little bit, the market was kind of holding its breath for any FBI big bombs about the Trump administration, but nothing happened. Nothing that nobody, I think, already knows, at least, or thinks they know. So there wasn't enough to move VIX. VIX was up 8 cents. I think maybe at one point it was up 10 cents. And on a Monday coming off a Friday, there was no adjustment. There was no vol, and the S&P 500, I think it might have squeaked out a 0.3 percentage point range today. So at least the market, shrugged that off with a yawn, and I guess I'm just looking to earnings coming up. But the Apple was interesting. We were starting to look at some cheap earnings juice, maybe to pick up. I'm looking for trades where we could kind of the earnings volatility will support the premium to some degree, but we could hold some positions sort of through this French election thing. You could get the little surprise. If you can buy the premium, you don't have a lot of decay. Between now and the election, at least it gives you kind of a free ride or a really reduced case ride. So we looked at a couple of those positions today. I'm going to add a few more tomorrow, I think. But as far as opportunity goes, I haven't seen much else besides that. The only thing we're trying to debate also is whether those darn bank stocks have kind of slowed their move down. It's been a while since they've gone nowhere. So as far as the interesting type trade, that was kind of it. At least among the pit chat glitterati.
Yes, the infamous glitterati over there in the land of the pit. And you're right, Apple still, continues to rally, and that vol continues to be comparatively anemic. 30-day vol south of 13, about a 12.5. 30-day realized south of 10, about a 9 and change. So I'm guessing if you're looking at earnings, Mr. Rock Lobster, you're going out a few months here. Is that the plan for some long premium? Perhaps some. I know you like yourself a little bit of diagonals and calendars, so you lean in that way. You're looking more straight up verticals in and around the earnings month/week itself. What was floating your boat?
So floating the boat was Apple short term, looking for just some little cheap time spread action. The only thing I would say about Apple is in the Jan cycle for the last earnings, you could buy the April for 16 vol. Now the after earnings cycle volatility is closer to 18. So they're respecting the earnings a little more, but the differential between April and the earnings, I would be surprised. I think this is a high for that. You have 12.5 for April, and the May cycle is almost 19. So there's all kinds of it's the market's basically saying nothing's going to happen for at least 5 weeks. And, and I know earnings are coming out and all that stuff, and we got a fallow period, but you do have some election stuff, and there's still very high volatility in Europe. It just, if you could find any way to pay for some of that stuff, it still looks interesting. So, and I was looking for Microsoft, my quarterly Microsoft trade. So that looked interesting as well, but you could buy the earnings cycle volatility in there for not very much either. So I'm looking for that kind of stuff, and maybe we'll get a little kick mid-April, but at this point, it's still, I think I'm feeling a little Don Quixote-esque, but other than that, we might get it. We might get some action.
Your buddy Ofer, who's been on the show recently, already has replied and says that to your comments on looking for a low vol. He says, simply betting that Apple stock doesn't fall apart has already been a winning option strategy. And he links, I don't have a chance to link to something. Obviously, he has some write-up on his blog about maybe looking at some put juice in Apple or perhaps some other interesting stats therein. So check it out over there if you are so inclined. Mr. Uncle Mike, let's turn our attention to you now. In addition to trying to get your head above water, your sea legs underneath you again, what else is cooking in the land of all thing RCM alts / RCM wealth advisors / RCM futures / RCM MISC? A lot of RCMs there.
Of course, never before in the history of the entire stock market has there ever been a better time to. I wonder what he's going to say here. This because it's not new all-time highs. What's he going to say? All right, unpause. Has there ever been a better time to sell Apple than right now? Whoa. Apple hit new all-time highs today. So had to come up with something for today to sound exciting on a day that didn't really have too much excitement. But yeah, Apple hitting the new all-time high was probably the biggest thing that I saw that was of anything huge and noteworthy. But on there, a couple other things that are going on throughout the day today. Natural gas did come up about 10 cents on the day. Oil remained very sluggish. Crude oil actually just only showing at 48.93, so it's still kind of in that range, looking like it might go back through the 50 mark at some point. It might not. It had a little bit of a rally last week, pulled back a little bit today, and by a little bit, we're really not looking at a lot. We're looking at just a few pennies here and there in the oil world. Right now, I think it's a time where it's the age-old debate. When markets don't move, they stay not moving for a while until they don't. So in other words, if you want to sell some premium right now, it might not be a bad time to do it because the market's not moving that much. Now, of course, premium's not that high, but the argument against it is that any moment when we do have a breakout, it's going to be huge and violent, and the premium that you sell will rip your face in. So we're kind of at that stage right now to where there's been people that have been selling premium for a while in general, and complacency may have started to seep into this marketplace. And that's going to be interesting to tell over the course of the next couple of weeks if it's actually here or not. To add a little bit to what Andrew said, not so much today, but over the course of the last couple days, XLF on the financials. Looking at XLF on the 16th, which was last Thursday, it actually had a price up to $24 and bring it up here, $24.97. And so now it's down almost 3% over the course of the last 3 days from the peak, not from the close on Thursday, but from the peak. So we've had a pullback in financials. Now, if you are a bull on financials and you are looking for an opportunity to get into them, this could be an opportunity for you. But what I would definitely heed caution on is that we still have had quite a rally on them on financials for a while. What's interesting about them today is that there's a little bit of a range of support from February 15th through February 28th. And then we had the gap up, and then it's just kind of been going sideways. If we close down, if we have another down day tomorrow in the financials, we're below that kind of range of support. So this is either an opportunity or this is something to where you might want to stay away because we might be going lower with it. Either way, I am bullish on the financials for the long term, as I am with a lot of things, with pretty much everything stock market long term. But I think we're at a very key point right now in the financial arena just because of the fact that where we stand technically. And well, let's face it, we haven't had any huge face-ripping moves in a while in the financials, and it's been a couple of weeks since that's happened, and we might be due for one. So anyway, that is what I saw happening in today's markets.
Face-ripping. Speaking of face-ripping moves and perhaps the fear thereof, we're finally seeing a lot of hand-wringing of late on the emergence now, all of a sudden, of the old CBOE Skew Index. If you're not familiar with that, listeners, of course, that is the index that effectively tracks the level of volatility premium in about 25 delta puts out in the SPX versus the 25 delta calls. Typically, puts obviously richer than calls, and the Skew Index tracks that differential. Usually hovers around 120, 125 or so. That's pretty much the normal range. Puts are always going to have a little bit of volume, a little bit of premium to them. Of late, it's been trending higher, hitting recent highs of about 154 and a half or so, which is getting pretty steep. A lot of people have been hitting us up asking us why, and it's kind of funny because about a month and a half ago, the script was completely flipped, which was everyone's asking us, why isn't Skew moving? We were in this rally ho mode in the marketplace, usually a good sign. People are going to start picking up some hedges along the way. We also had a lot of events lurking on the horizon. We had earnings, we had the Fed. You can make an argument if there was ever a time you want to pick up some protection for your portfolio, it was about a month ago or so, and yet we didn't see it, but now we are seeing it, which is kind of interesting. Obviously, Skew has two moving parts, so that's why I always am a little bit reticent to just quote one number for Skew. You always have the activity in the call wing, which could be depressed by aggressive call selling. You also have premium in the put wing, which could be inflated by call buying or deflated by put selling. So it's really, I wish they would quote Skew almost as two numbers. That would be a little bit more informative, I think, but Skew is already a pretty obtuse concept. I think CBOE had to do what they had to do to make it somewhat palatable. They spit out one number, and people can wrap their heads around that. But still, this is interesting, and it is also kind of interesting just the fact that we're getting to this now. I mean, I guess you can make the argument. Uncle Mike Hewitt is joking about the all-time highs out there in some of the indices and how people are getting perhaps a little worried that we're a little bit top-heavy. Things are a little bit frothy, maybe looking to pick up some protection, and that certainly can be the case. I'm not one of these people who's really looking to read into the tea leaves right now. I'm not shocked like others are that Skew is suddenly high. I'm perhaps a little more surprised it didn't happen sooner than it did. Skew usually a bit of a lagging indicator, not perhaps this lagging, but usually a bit of a lagging indicator. But still, it is kind of interesting. Mr. Rock Lobster, was the timing of this emergence of the Skew a topic of discussion or debate in the pitch chat today? And what are your thoughts on, we've been rallying ho ever since the election, and yet all of a sudden in the past few weeks or so, we see Skew suddenly perhaps catching up to where some may argue it should have been a few months back?
I think, yes. I mean, part of this CBOE index, like you said, is like it's calls and puts. So, and then it's a call relative to a put. Right now, the upside volatility in there is the 2400 call is 7.76%, which is not a lot. So, it would always be nice if that index would pin a volatility on the call and then just watch the put move around it. But I think this is one where I don't think the puts have done a tremendous amount. We were just looking at 30-day Skew today. Put Skew looked okay. It's just the calls are really cheap, meaning we had a lot of kind of rally ho, and now I think the rally ho is kind of flattening out a little bit. So there's there is just less of a demand for calls, and the pitch of the calls are a little steeper, pointed down than normal. So, and then that makes Skew balloon because if the call vol is nothing, the put vol looks really high. So yes, it did come out. Every once in a while, the tinfoil hat guys at Zero Hedge put out this stuff, and So it's always good to watch, because that way they can say, listen, we call this the skew is through the moon. And as an index, it is very high. I'm not going to say it isn't. I mean, I think it's at a 1-year high at least. So I think the last, and what was it in? And the last time the skew was super low was a great buying opportunity. It was trading 113.84. In mid-March of last year, right before we started to rally again. So, the fact that calls are very cheap and puts are very expensive, relative, usually means we've rallied a bunch, and that's where we are. So yeah, we certainly could sell off. I think at this point it wouldn't take much of real news to make that happen, but at least as we sit and watch, just I guess we're waiting for the French elections if that's a big deal or not. So, but I think the 30-day put skew, or it's just 30-day put curve is a little higher than normal, and just because the at-the-money volatility is so darn low. So I think you always want to watch these little you want to watch these indicators when they get to an extreme, and it's at an extreme, which usually means that the market is at an extreme as well. So that's where we are. I mean, there's a lot of room to go down, and it's hard to really make a case to go up until we have some new earnings. So maybe the skew, maybe they're right. Maybe the zero head guys, they're going to hit it right on the head.
It's the end times. Zombie apocalypse. High skew equals zombie apocalypse. I like that. That could be a good headline for the show. But people are hitting us up with all these different variations. Like we always say on this show and on Vol Views, everything in volatility has a context. We were just talking about the call wings and the put wings, how that can skew, pun intended, the skew number. Someone else hit me up today. I forgot where this chart came from. This is a chart of the VIX to skew ratio, which is kind of interesting. And according to their analysis, it hasn't been this high since, looks like mid-2014. And when it is that high, of course, the S&P tends to have a fairly aggressive movement thereafter. Of course, it doesn't take a genius to, I think, really realize these levels, that ratio is going to be pretty high. Skew is ticking up. Markets, a high skew to VIX ratio, what's that going to put in your head? That's kind of almost tailor-made for the scenario we're in right now, which is going to be a pretty lofty index market level, which is, of course, going to equate to a low VIX level, which is, of course, going to equate to a lot of buying and hedging demand for puts. So you're going to have a high skew, low VIX. It's just a perfect storm for a high skew to VIX ratio out here. So yeah, I haven't really, not an indicator I put a lot of stock in, but a lot of people are hitting me up with that one as well. Uncle Mike, any thoughts here on just the reemergence of skew and its impending leading to the zombie apocalypse?
The reemergence of the skew or the taming of the shrew? We got all sorts of different ways we can go with this one for a show title. It's exciting. Well, I think that I think Andrew kind of said it all in terms of the indicator side of it. But here's the other thing to think about. If you're a bull and you believe that we're going to continue to go up further, or let's say maybe we go up a few more points in the S&P and create new all-time highs again, then if we have more expensive puts and less expensive calls, then the first thing that's coming to my head is then that means that's a great time for you to do a risk reversal. And you can sell some puts, buy a couple of cheap calls on it. You can ratio it. I mean, we've talked about in the strategy block, we've talked about on the show 100 times at least, I'm convinced. But that would be a great time to be doing something like that. I think it makes sense that we do have the skew starting to come in a little bit more. But what's concerning, just as a market participant in this, is that we are going to get a pullback, even if we continue to rally. And me being the bull that I am, I think we are going to continue to rally over the course of the next year or so, and longer, of course. But the pullback that we have might be, the more we rally, the greater the pullback. So with the puts becoming more and more expensive, if you are going to be using risk reversals, if you are going to be doing bullish trading in some way, shape, or form, I would just caution everybody to understand that when we do get a pullback, and we will, when we do get a pullback, that the more the rally, the greater the rally, the greater the pullback, most likely. And that's how I'm kind of looking at it as we go through this.
Speaking of going through things, let's keep on going with the show right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, it's time for the Odd Block. Hard to transition away from zombie apocalypses and into unusual activity. We shall do our best. This is, of course, a portion of the show where we break down the interesting, the weird, the wild, the perhaps zombie apocalypse causing activity, that was lighting up our tape today. Let's kick things off. The land, everyone knows if there is going to be a zombie apocalypse, it's going to start in Canada, in the wilds, the hinterlands of Canada, perhaps up there by the Arctic Circle. Some crazy disease testing laboratory gone awry. And of course, that's where our unusual activity journey starts today with EWC. This is the iShares MSCI Canada Index ETF. Say that 5 times fast. I dare you. And this is, of course, the a name that does, a whopping 1,500 contracts a day, doing a bit more than that today, including, looks like some verticals here. And of course, they sent me I was going to say, wait a minute, this is the wrong day. This is, of course, the wrong contest. Mr. Rocklops, I'm going to let you kick this off while I find the right to action. I was going to say, wait a minute, because EWC not lighting it up, even though I do stand by my claim that a zombie apocalypse, if it was going to happen, will indeed happen in good old Canada. So, Mr. Rocklops, you kick it off while I get get everything updated over here in the studios.
Okay, I will kick it off with, what the heck did I just send Mark?
Lies, all lies.
I like messing with his head every now and then, but I could swear that I sent him the correct stuff. Anyway, what do we have? We have a GameStop, ticker symbol GME.
Also a place where the zombie apocalypse might start, in GameStop.
And I think they might be coming right through the TV screens, actually. But GameStop was down 63 cents to 24.01. For the amount of money my kid spends in there, I have to be a buyer of the stock, I have to admit.
They have a GameStop in Maine? Really?
They do.
It makes me want to short the stock just for spreading too far or wide at that point.
Well, the thing is, there used to be 3 GameStops within about a 10-mile radius, and now there's only 1. So maybe you want to buy the stock because they pulled back. And this one, the one store, it just has little feet just burning a hole in the carpet, trading their games and trading up and doing all that kind of stuff. So anyway, so we do have GameStop. And it's near the middle to, I would say, lower end of the range. So today I just saw a big block of puts going up. The March 24 and a half put. So they expired on March 20. They'll expire on March 24th, end of the week. But somebody's buying the 24 and a half puts, slightly in the money puts. And they bought 4,000 of them for 86 cents. So when I first looked at it, like, oh, somebody's buying some puts. And then I realized I think they're buying stock with it because it went up marked spread. And usually when you see a put block go up and you see it marked spread, and there's no other options, no counter side to it, it has to be stock. So and lo and behold, 240,000 shares of stock went up concurrently or within a minute or two of the 4,000 shares. So it was about delta neutral or the 4,000 contracts. So somebody is looking for a bit of a move in GameStop, and to which direction I do not know. Although it is trading, it was a $40-some-odd stock in 2016 or late 2015. And now it is a $23.88 stock. So it actually pays about a 4% dividend, too. I was kind of surprised about that. So GameStop seems to be one of those kind of quiet little money spinners. Probably not a lot of growth. Everybody thinks it's going to be the next Radio Shack. But somehow it seems to keep up a brisk business in games, old games, game consoles, and stuff like that. So as far as that looks, it looks like a it looks like somebody's looking for a bit of a move, and this is the big cycle for them after the holidays. So this is kind of the make or break for GameStop, at least for this quarter, it looks like.
Yeah, I'm amazed that I'm still constantly amazed at their longevity. I mean, they had such a good run there of just squeezing everyone to death on their entire used game liquidity that they created. The bid-ask spreads they had on those were enormous. They were printing so much money on that, and those days are probably going to go away, of course, with the era of digital demand and digital delivery. We shall see how GameStop continues. These days, you walk by a GameStop, they sell more pop vinyls than anything else. So maybe that's how they're reinventing themselves as a tchotchke store. All right, so let's see. I think I've seen through your lies, Mr. Rock Lobster. Let's see if I am correct. If my minions have helped me sort out your lies and your madness. Let's turn our attention now to because there is a zombie apocalypse. You're gonna want some security solution to fight back with that, particularly if it's like a zombie virus on your computer. And that's where we turn our attention now to FireEye, ticker symbol FEYE, F-E-Y-E, closing today $11.61. These are, of course, a cybersecurity firm. Had a good day today, up 88 cents, or nearly about 8% actually on this name. So not a bad run. This is the name that does about 12,000 contracts a day, doing a little bit more, 58,000 today, 11-1. Calls over puts. That should tell you where our eye was drawn. And if you scroll through the months, you'll see one kind of leaping off the page at you, listeners. And it is indeed June. It was what first caught our eye looks like a bit of a roll down of from the 15 down to the 13. Looks like paper coming in, doing that 13-15 vertical in June, about 10,000 times, almost exactly 10,000, a little bit less on the 13s, doing it on for 47 cents. The 13s actually trading through the bid, which is interesting pricing. But there's paper pretty much across the board here on the June cycle. By the way, there is 17,000 contracts open on that 15 strike, which is probably why we're surmising that they are perhaps adjusting down to a little bit more relevant strike again. FireEye closing today right a little bit north of 11.5, so that 15 strike a bit out of the range. You also saw about 10,000 going up here on the 12 strike as well, Mr. Rock Lobster. So a total of actually 30,000 contracts going up out here in June. It looks like maybe he is repositioning down maybe the 12-13 vertical going up as well, or maybe he's stupiding it up here on the 12s and 13s. Couldn't get enough, couldn't decide. He wanted to split the difference, come in at 12.5. Again, about 3,400 open on the 12s, about 7,000 open on the 13s. So clearly, this is opening paper, however you're breaking it down. Looking at the year that was, FireEye has had a bit of a range. It got as high as about 17, actually about 18, almost $19 back in April, May of last year. And since then, it's kind of been slowly trending downward. Not exactly a boom time here for their cybersecurity solutions. But someone was a little optimistic. Perhaps Mr. Rock Lobster scaling back that optimistic view, but perhaps still keeping some of that fire alive. What's your take here on this just June call flurry here in FireEye?
I think this is kind of the perennial takeover. Everybody used to love this stock. And now it's just sort of, we don't make money, cybersecurity. And at some point, the non-earnings usually catch up with stocks.
Unless you're Amazon, then you go for
exactly.
20 years.
But Amazon, I guess, does make money now. They found a way to make money. What's funny, they're adding retail stores. So I'm wildly confused about
everything.
Amazon.
Old is new again. Philly and Box launching options exchanges, floor-based exchanges. Everything old is new again.
Maybe you get out the old guys and you go back out there and you start putting some quotes in. I don't know if I'm going to do that again, but it almost sounds fun to do.
I think you should be a walk-in broker. Just walk in and say, "How are they now?" Turn the tables.
Yep. All the old gray-haired guys will come back in and floor trade. I think this was. I think somebody was rolling calls down. It looked like because of all the open interest. I'll check tomorrow, but It's doing the dead cat bounce, and it's always kind of a takeover target every once in a while. Like kind of on Twitter was last year a couple times. All the assets are cheap. Somebody's going to buy it, and then nothing really happens. So it has that look, but implied volatility jumped, and it's jumping from ridiculously low levels of volatility too. It's kind of a tech stock, and it's trading 46 volatility, so very, very, very inexpensive stock and options. And I guess that's what somebody's doing.
That is indeed what somebody is doing. And last but not least, maybe if there is a zombie apocalypse, then maybe you want to head to parts unknown or peeps a little bit overseas, in which case you could look up, and maybe while you're there, you want to watch some television, because of course, in the hinterlands, while the zombies are eating the world, you want to at least be distracted. So we'll turn our attention finally to Grupo Televisa SAB, ticker symbol TV. This is an ADR, in case you haven't guessed. Closing today, 26.5, right about close to unched on the up a dime or so on the day. So it wasn't underlying that was lighting it up today, but the options certainly were. This is a name that does a little bit shy of 2,000 contracts a day, doing 11 times that, about 22,000 and change today. 500, this might be a record for our for puts versus calls, Mr. Rock Lobster. 598.3 to 1 puts over calls. 22,772 of the puts, and only 38 of the calls. And if you're wondering, what were they trading? Well, it was indeed the APE 26s that caught our eye, and indeed theirs. It started off with a block of 12,580 paper selling for 40 cents. As the day went on, that total went up about another 10,000, actually about exactly 10,000. It's about 22,500 and change total on the day. The latter kind coming in obviously at different prices, like about 45 for the second chunk or so. Again, just blasting these out across all the floors, all of the exchanges. This is a kind of a strategy we've discussed before. There was a size put seller back on the March expiration cycle and the March 26 strike as well. Back in February 28th to be precise. Those went out worthless. Our friend here obviously looking to take his 40 cents and go home. He's playing a little close to the fire here, though, Mr. Rock Lobster. Like I said, it went out 26.5. It was trading 26.40 today, so it's not exactly outside the realm of possibility of this stock could close shy of the 26 handle by April expiration. Looking back at the year that was, it kind of has been a bit of a range-bound year. It hasn't moved a heck of a lot. It's been about 27 and change on the upside, and on the downside, right around $20, 19 and change. So he isn't flirting too much with disaster. It has been pretty range-bound. But still, these puts are maybe playing a little bit fast and loose with it, which is kind of interesting. Take us home, Mr. Rock Lobster. We always like repeat paper, especially repeat paper, easy for me to say, that is successful. So what's your take on our friend here blasting out some more puts in TV?
I saw, like I said, they sold these puts before. I think they've been selling them because of, how Mexico kind of got slammed after Trump got elected, and they're going to build a wall, and we're not going to trade with Mexico anymore, and blah, 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 blah. We in the pitch chat, that's been kind of a subject for us. We're fading that. We've been, small little buyers of EWW and stuff like this. I kind of like these plays because, the price of oil went down and they slammed Mexican equities. But what the heck does that have to do with Grupo Televisa? So I think there are some interesting plays. But this customer bangs out 20,000 puts at a time. I know, isn't it Carlos Slim that owns? I know he owns the telephone monopoly. I don't know if he owns the TV monopoly too, but he probably does. It's just, I'll buy 2 million shares of TV whenever I feel like it. So it's not a small chunk of puts to sell when you think about it. 2 million shares at $26 a share is, that's not nothing. That's $50 million. So maybe he wants a new car. He wants a new car, so he's whacking out the puts. But they did go about $1.50 in the money last cycle, and they ended up being worthless. And I believe they rode them out. So this just looks like one of those stocks that doesn't really go down very far, but does have, some juice in the puts, So I don't think it's a bad idea if you want to get long Mexico and get long this industry as it goes toe-to-toe with the Trump administration, so to speak.
There you go, going to toe-to-toe. Time for us to go to toe-to-toe with you and your questions. It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the man said, this is the portion of the program where we read your tweets, your questions, your comments, your insights, your emails, your website posts on us, all sorts of. You reach out to us all sorts of different ways, your Facebook questions. If you have a hard time remembering all that, of course, so you can just find us via the app, has it all baked in there. You can even call us if you are so, if you're brave and so inclined and don't mind having your stuff played out on the shows, which we could do as well for the bold amongst you. Let's start things off. I think we got John Girl writing in about all of our talk here on zombie apocalypse. He's and Skew. He says, I'm going to call my insurance right now and make sure they cover a zombie apocalypse. I think you should do that. If there's one thing we've learned from this program today, there is a very high correlation between zombie apocalypses and, of course, high skew level. Before we get into some of the other stuff, our questions of the week. You guys have been voting. It's been fast and furious in our options broker madness. Of course, it's March Madness time. It means it's broker madness time yet again as well. You too can win fabulous prizes if you vote and retweet and like all of our various stuff we have going on. We take all the brokers out there, at least the top 16 or so, and we pit them against each other for your viewing enjoyment. And so if you ever want to get vengeance on your broker or a broker you don't like, now's your chance. Get out there and vote for or against your brokers of choice and make them happy and or sad. It has been some interesting upsets already, shall we say. Trading block kicking toss and TD Ameritrade out of the game already. So trading block with a little bit of upstart win, kind of like Wisconsin over Villanova out there recently. We got a nice grudge match going on right now. It's pretty tight. Interactive Brokers versus Options Express. This is in round 2. Those two are really slugging it out right now. It's neck and neck. So if you have a vote on one of those two, get over there at Options. Make your voice heard. We got Lightspeed kicking the tar out of Tradier, a newcomer to the tournament, and Lightspeed having none of it, just kicking them to the curb pretty brutally. So we'll see if that continues. If there's other players in there, if you go click on our ad options Twitter page there, and you too can see exactly how it breaks down. You too can make your voice heard. All right, getting in. Speaking of making your voice heard, we asked you guys this week, since we're talking about brokers battling, let's have the exchanges battle too. Someone pointed out to me that we're close to having enough to have a round of 16 for all the exchanges. Close. One away. Got 15 right now. So he said, hey, let's have the exchange groups, because there's so many of them. Let's have them battle it out. What's your favorite? Where do you guys send your business? So we asked them, CBOE Bats, NYSE, Arca, AMEX, NASDAQ, PHLX, ISE, or other, which is Box, MIAX, etc. Mr. Rock Lobster, we'll start with you. Do you have a favorite, and what do you think is winning?
Well, I always have to send it to my two favorite exchanges, the CBOE and the Arca, because those are both traded there, so I send the stuff there anyway, if I can pick my routing zone.
So that's who you're voting for. I'm trying to pull up our results while we're going. Mr. Uncle Mike, do you have a preference in all this exchange madness?
No, I'm just wherever the best quote is, and that's what I like. But with that, I'll stick local, and I'll vote for the hometown boys, the CBOE.
We have so many posts going up. I'm actually having a hard. There we go. Here it is. Yeah, CBOE taking it so far. It's again early days. Just posted it. It's our question of the week. You got all week. CBOE about 55% of the vote. 36%. For NASDAQ, Philly, ISE, and only 9% for and NYSE, Arca, and AMEX. No love for Box or MIAX or all the others floating around out there in the crew. All right, moving on to some of your cues here. Here's a good one, actually. This kind of reminds me of what you were just talking about earlier, Uncle Mike, with all your talks of this being a good setup with skew for a risk reversal, a bullish risk reversal. JVao agreeing with you, saying sell put plus buy call equals long delta exposure equals cheaper than buying the underlying equals maximizing skew equals why doesn't everyone do this? I guess Mr. or Mrs. JVao has awakened to the magic that is the bullish risk reversal. Yes, everything you point out here in your little homemade equation is indeed correct. If you are selling the put and you're buying the call, you're getting long deltas. You're typically, if you're doing it in an equity or an index, you're taking advantage of the skew. If you're doing it in, say, a commodity option, the skew may be different. So buyer beware out there. But in most equity and index products, you're going to be selling a richer implied volatility product, buying a cheaper one. So it's favorable from that perspective. That's why we go on about this strategy all the time. It's an effective strategy. If you want to get long the underlying, you don't want to have the same outlay, you don't have the same risk profile, you want to live to fight another day, you want to keep some money in your account. This is a good way to go about it. Why doesn't everyone do this? Well, not everyone listens to this show, but also just because some people fall in love. I've seen this happen before too. I'm sure you guys have as well. Some people they discover this strategy and they start falling in love with the put sell inside. And then they tend to forget about the call buy inside. And all of a sudden, I like selling these juicy puts. And next thing you know, they're just put sellers, which has its own merits too, if you know what you're doing. But still, I've seen people get lured to the dark side by this strategy. But still, I like what you're putting down here, Mr. or Mrs. JVao. I can co-sign on your equation. Uncle Mike, you were just singing the virtues of bullish risk reversals. What do you have to say here for our friend JVao and their homemade equation?
Risk reversals are a fun thing. A lot of things you can do with them. A lot of adjustments that you can make to where if you maybe add a nickel here and there, you can roll some things up. You can take some puts off the table after you have a profit and still have all the upside for a nickel here and there. There's just so many things that you can do when you go the route of the risk reversal. Now, don't get me wrong. If the market goes straight down, you're going to get your face ripped in. But with that being said, there's a lot of things that you can do with it. The only thing I would add is that if you are going to go the commodity route, when using the risk reversal as a collar, meaning that you own the underlying and you buy the put and sell the call, like I was talking about my silver trade a couple months ago, that's a way with which you can use the risk reversal or the skew in the commodity realm of things a lot of times. Not every time, but another way with which to use it to your advantage.
Before we get off it, any updates on the silver collar? Anything going on there, sir?
No, it's still, if it goes below 16 for long enough, I'll make an adjustment to the downside, and I'm waiting for it to go up more to make some adjustments on upside. So just still hanging in there, but I guarantee that all of my 10,000 best friends on this show will be the first to know if we do.
Yeah, I mean, you've seen a lot of rock and rolling in gold, not as commensurate to big of a move out there in the silver land, at least not enough to make Uncle Mike adjust his collar. Mr. Rock Lobster, any additional thoughts here on, I think, one of our collective favorite strategies, the old bullish risk reversal, and its many, many use cases?
I do like it. I like it on beaten down stocks. I don't like it so much on kind of the high flyer stocks. Because really, you might as well just buy calls if, the stock's kind of running, I think. But mostly stocks that have, I think, a little potential to run, but you don't want to spend any real money for the calls. So, but as with anything, you sell puts, it's a whole lot easier if you sell a put, but being mentally prepared to take delivery. That way, in case you have to, you are not grumpy for a long period of time.
So do you discover the same thing that we do, that people start, they start learning about this strategy, then all of a sudden, magically the call part goes away and all of a sudden they're all about off puts all the time?
Yeah. And then, we have, the only reason when I do that strategy is I sell the puts first and I wait till I start making money on the puts before I buy the calls. So I go, okay, I'll sell the put, but, be right for a little while before you buy the calls. Just because at least it gives you a little bit more room just in case. It depends how bullish you are, but I mean, if you sell a put and the stock goes up, you'll still make, you still collect the premium. But you still need the stock to rally a little bit for that call to go. And normally you need a little bit more time for the delta of that combination to work out in your favor. So I think the risk reversal, unless you're really looking for a hyperbolic bounce short term, it's probably more like a mid to longer term type trade.
That's kind of a set it and forget it. But I can get behind that inertia type setup. I've done that once or twice myself. You sell the puts and then see what happens on the upside before you dive into the call. So I can get behind you on that. It's not quite my approach to the stupid, which I hate, but I can maybe understand in certain types when the underlying is moving your way. But I can still see maybe a similar argument. Speaking of arguing, it's time for us to argue about what we're watching in the future. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to the old Around the Block. This is, of course, the segment where we talk about the names that are popping off this week, things we're still watching for the rest of this week into the old weekend. And, not a lot of earnings coming up, but there still are a few high flyers cooking out there, including the aforementioned GameStop, which is kind of interesting. Our friend out there obviously playing a little bit of that GameStop play going into earlier. Maybe our friends here pricing in the ultimate demise of GameStop as the zombie apocalypse and also the digital revolution of gaming comes in. Looks like they're pricing in about $1.80 or about 7.5% or so for that at the money straddle. The earnings are on the 23rd, so they're coming up around Thursday. So we got a little bit of time coming up before. Actually, I'm not sure they're for the bell, but they are coming up tomorrow. Is Nike? There's been a lot of drama in the retail space of late, and Nike not immune to that out there as well. Some stories in the retail space have been attractive, like Best Buy kind of perhaps resurrecting itself, and then other names have kind of gone the way of the dodo. So we'll see what Nike can. Looks like they're pricing in, what is that? Looks like about $2.70, which is right about 4.5%. Again, Nike closing today about 58.70. They're after the bell tomorrow, so you do have another trading day if you're so inclined. So there are a few names still popping off, even though we're kind of into the dregs, shall we say, of all things earnings. But don't worry, as with all things earnings, there's another cycle right around the corner. So just brace yourself, and we'll be there before you know it. That said, let's start with you, Uncle Mike. What is catching your eye for the rest of the week in addition to your legion of silver collar adjustments?
My myriad of silver collar adjustments. Well, it's still the numbers. I mean, we're watching to see if something crazy comes out that may or may not happen on the news. You never know if something like that's going to go down. So always looking at that. But for the most part, it's the numbers. I want to see if XLF can hold the 24 level. That's a key number for me. I want to see if XLE can get back above the 70 level. Oil's been kind of not doing a lot, or I shouldn't say not a lot, but recently over the last few days, it hasn't been going down 9% in a week, so like it did in the past. So with that being said, just watching some of the numbers, want to see if XLE can get back up there. And, you mentioned the silver collar adjustments. Silver is back above the 1650 level. It was below 16 going into the Fed announcement day, but we're back above the 16.5 level. So I want to see if that can continue to grow. So once again, not a lot of real news that I can see being earth-shattering over the course of the next few days, but there's a lot of key numbers that we are in the precipice of, I believe.
Yes, including seeing if that skew can soar to ever higher, loftier, and more terrifying levels. Mr. Rock Lobster, take us home. What are you watching over there for the rest of this week, sir?
Well, I'm hoping to watch Apple go up. I am watching to see if VIX can get off the floor, if this French election thing becomes anything, if there's any more crazy out of Washington. And so far, that's about it. I mean, it's weird to say we're in March and like it feels like the market's done for the year, but I know it will not be. So, but darn if it isn't kind of slow. And, I'm waiting to see how our earnings start to price and trickle out here. We got another month for that, but it's coming around. And by the way, everybody, today's the first day of spring. So I'm looking for the snow to melt.
Your ice rink is finally done, finally finished, sir. And also, that music means we are done here. We're finally done here on the old option block today. We survived another program without the zombie apocalypse coming for us. We better get off before we press our luck. But before we go, let me check back in with my cohorts, my partners in crime, my fellow zombie apocalypse survivors. Starting with you, Uncle Mike, what's cooking for the rest of this week, and what would be your preferred weapon in a zombie apocalypse? Would you go straight up like samurai sword? Are you more of a flamethrower or club guy? What's your call?
Gosh, I don't know. I guess I'm not prepared for that. I'll have to see what I can do when the zombies come. But yeah, with spring, I think it's first day of spring today. It's excitement. One of my clients even told me that his chiropractor emailed him to tell him it's the first day of spring. So his theory is that he's awaiting for him to injure himself again in the garden. So anyway, neat, interesting marketing thing for chiropractors to mention to people it's the first day of spring. But with that being said, if you do survive the zombie apocalypse in some way, shape, or form, and you would like to perhaps have a financial advisor to guide you through the survival of the zombie apocalypse, feel free to give me a call. Would love to work with you. 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
All this talk of zombie apocalypses has given me a great idea for a Twitter poll, which we'll put out right after the show. But before we go, Mr. Rock Lobster, what's cooking in the land of the pit, and what is your zombie apocalypse of choice? I'll give you a hint. I'm leaning towards sword with maybe like a nice shotgun built in, like a combo. Because then you got all your best of both worlds right there. Because, got to do crowd control, too.
I like that. I was just going to go old school with the Arnold, with the Terminator Gatling gun. I thought that was pretty good. I've never actually seen a zombie movie. I know there's zombie films out or TV, but I've actually I don't think I've seen one. So I'm just going to go with what
you're missing out, sir. It is an oeuvre of like no other.
Is it? I'm just going to go Terminator with a Gatling gun. That seemed to work pretty good. As far as Option Pit goes, we will be doing a new master class on selling premium. The last one, everybody liked it so much that we have to do another one. So that is what we will be doing. We'll be coming out, I'm going to say, after Easter.
The masterclass. Check it out over there. OptionPit.com. I was like saying masterclass. It sounds pretty good. Check them out there. Let us know your thoughts on all of our various. If you haven't weighed in on the broker battles, the broker madness is happening all week long. It goes through as long as the tournament runs, so you too can make your voices heard. Some interesting upsets already. Who knows how it's going to play out? Last year, Trade King took it in epic battle at the end there. We'll see how it plays out this year. We got some new entrants this year, some new names mixing it up. So I'm looking forward to see how all that plays out. At Options on Twitter, although you can vote in some other outlets on Facebook and stock twits as well via DM. And if you want to get registered to win all the fabulous prizes, and we gotta do something we can track. So you gotta retweet or like. Unfortunately, they won't let us track who votes in the polls. That would be cool, but that would make things easier. But no, so you have to retweet and like if you want to get registered to win the fabulous prizes. You can win some cool Options Insider gear or a nice swag box from all the cool exclusive items we get from all the various shows and conferences we go to, stuffed into a box. Or maybe even a nice Amazon Echo Dot or some other fun stuff out there. All sorts of fun prizes. Check it out at Options to learn more. And we'll see you guys on Thursday for more of the Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.